facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. The Dow, the S&P, NASDAQ, best level of the day once again, with the S&P now up by 56 points. Still on track for a losing week, but up today by 1.4%. The Dow up 208, up 0.6%. NASDAQ right now up 234 points. That is a gain of 2.2%. 10-year yield 3.47%, with the 2-year yielding 4.17%. Spot gold 19.30 the ounce, down by about 0.1%. West Texas Intermediate crude oil up 1.2%, 81.31 a barrel. Federal Reserve Governor Christopher Waller says he backs moderating the size of the central bank's rate increase again when officials next gather, while continuing to tighten. And Kansas City Fed President Esther George, who is retiring this month, says officials don't want to raise rates by so much that policy becomes overly restrictive and the economy can avoid a sharp downturn. She spoke this morning with Bloomberg Radio.
You want to make sure that as you start off on that path of tightening, that you're communicating well and that you are not going to be more disruptive with that. I think we're in a good place today, again, being very clear about the commitment to getting back to 2%, some of this aggressive tightening. But we are reaching a point, I think, where it will be important to start looking around corners, listening more carefully for where some of those shifts are going to take place.
Kansas City Fed President Esther George. Netflix co-founder Reed Hastings stepping aside as CEO of the company he has led for more than 2 decades. Netflix shares are rallying after last night's earnings report. Netflix did add more subscribers than analysts expected. Netflix right now up by 7.6%. Amazon's cloud unit is going to spend $35 billion on new data centers in Virginia by 2040, underscoring its determination to stay ahead of rivals Microsoft and Alphabet. Amazon today up by 3%. Recapping, S&P up 1.4%, best level of the day. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. The new issue of Bloomberg Businessweek magazine, it is out on newsstands, online at Bloomberg.com/Businessweek, always on the Bloomberg terminal. And in it is a harrowing piece about the human smuggling industry. The last leg of the global smuggling route leading to the U.S. is often shepherded by Americans who just need some money.
This, as Bloomberg's Julia Love found out in her story. She wrote it, and she joins us from via Zoom from San Francisco, along with the editor of the magazine, Joel Weber. He's with us right now in the Bloomberg Interactive Brokers studio. Joel, the coyotes working the U.S. side of the border are often highly vulnerable, too. We so often hear about the migrants and their plight. We don't necessarily hear these stories. I read a story like this, and I think to myself, wow.
Yeah, this one's going to stick with you. I was really excited about it from the moment that Julia pitched it because of obviously the U.S.-Mexico border just being this ongoing, smoldering mess. And we definitely hear a lot about the migrants. Here in New York, obviously people getting bussed up from Texas and Florida. Right. But what we don't really ever hear about was what Julia was able to tell us about, which are the coyotes who often bring people across the border knowingly and unknowingly, I think. And as she found in this character, Dennis Wilson, there's a lot of down-on-their-luck Americans who are often as vulnerable as the migrants themselves. So Julia, back us up. Who's Dennis Wilson, and how did you find him?
Thanks, Joel. So Dennis Wilson is a man from Corpus Christi. He spent most of his career working as a chef at Denny's. That was his last full-time job. But he had been struggling with homelessness and a lifelong drug addiction. And it was while he was panhandling one day that he was recruited to transport migrants. He thought he would be moving farm equipment. And I found his case when I was reviewing hundreds of court cases, looking at the profiles of American smugglers and trying to find one person who would really be the best vehicle for this story.
Go ahead, Joel.
Well, it speaks to something else here, which is, as Dennis found out, this is illegal, smuggling across the border. And when he was arrested, and was actually hauling dozens of people across the border. He got the book thrown at him. What's happened to him since?
So Dennis was in prison for about 3.5 years. We connected in the last year or so of his incarceration, and he was released from a halfway house in August. And he is still struggling with finding stable housing, but he has really made a lot of progress. In prison, he completed a drug treatment program, and he has been able to stay clean. And he really feels, I think, like he's finally on a good path, although many challenges remain.
I was pretty surprised at an early anecdote in the piece about the way these two men worked with him to actually get him to start driving. They started at a relatively low number to pay him, and he just bartered them up essentially to $1,000 per day, which is some real money. And it made me really think about what the economics of this are, because even this is a story about people, it's a story about humans, but it's also a story about significant sums of money.
Yes, absolutely. I mean, even at the rate of $1,000 a day, Dennis was making, I would say, a below market wage. The going rate for transporting migrants through the checkpoint is usually $1,000 per person. Granted, Dennis didn't know that was what he would be doing, but the sums of money involved really are quite staggering.
And actually, just on the other side, what are migrants typically paying to be smuggled across the border? And there's obviously the figure that, or the Latin American quotient, but this is a global phenomenon, right? It's not just solely based with people crossing the southern border.
Yes, absolutely. So the price that migrants pay really varies quite widely depending on where they're coming from. The figures that I was hearing was that migrants coming from Central America were often paying $10,000 to $15,000 for the journey, but migrants coming from Africa or Asia might be paying north of $40,000 for the trip. So it's really just a very heavy burden for people who are already in a really difficult position.
Julia, I have to say what really stuck with me is you spoke with a U.S. Department of Homeland Security Special Agency who noted that as long as cycles of violence and poverty push the migrants to leave Central America, and as long as South Texas residents face such limited economic opportunities, there will always be another Dennis Wilson. It just seems so sad that this is going to continue on and on. What breaks the cycle? Is there something that will break it anytime soon?
It's an interesting question. I have spoken to some people who feel that the federal government would do well to focus on only prosecuting the worst offenders, while Dennis's case was pretty serious. I have seen other cases in which U.S. citizens are being prosecuted for transporting just a few migrants, sometimes even one migrant, and there are some who feel that the government would do well to focus on going after the big cases, so they can really start to target those who ultimately run these networks, rather than the drivers at the ground floor, who often have very little information about what's really going on.
So one of the joys of my job is being able to publish stories like this, and unraveling this story of a place and people that you would just never otherwise know about, at least for me personally. How about for you, Julia? What did you learn along the way of reporting this story?
For me, it was really just a fascinating experience. I had always thought of sort of the work of coyotes as ending at the U.S.-Mexico border. And so just learning about how far the Border Patrol scrutiny extends into the United States, and kind of the shadow economy that creates of U.S. citizens working the last leg was really fascinating. But really the most powerful experience, I think, was staying in touch with Dennis over I think it's been about 2 years now that we've been in touch, and it was really powerful to bear witness to him as he
Right.
finished up his incarceration and searched for what was next.
A credible story. We got to the core. So much great detail. We highly recommend you check it out online. Julia and Joel, thank you so much. This is Bloomberg.
It is 2:53 on Wall Street. I'm Charlie Pellet with today's company headlines. Google parent Alphabet is cutting about 12,000 jobs, more than 6% of its global workforce, becoming the latest tech giant to retrench after years of abundant growth. The company's CEO told employees in an email the cuts will affect jobs globally and across the entire company. With the layoffs, Google joins a host of other tech giants that have drastically scaled back operations amid a faltering global economy and soaring inflation. Meta Platforms, Twitter, Microsoft, and Amazon have all been slashing their ranks. Today, we've got Alphabet shares rallying by 4.9%. The online furniture retailer Wayfair is cutting about 1,750 jobs, or 10% of its workforce, becoming the latest company to seek to bring costs in line with a new economic reality. Shares of Wayfair, they are surging today. We've got Wayfair up by about 20 21.1%. Vox Media, the publisher of properties like Vox.com, Eater, The Verge, and New York Magazine, is laying off 7% of its workforce, citing a tightening ad market and economic slowdown. Eli Lilly shares are slipping after regulators said they need to seek more data on the company's application for a quick approval of a potential Alzheimer's disease treatment. Lilly shares, they're trading lower today. Lilly is down 1.8% to $344.69. And those are some of the company stories we're following this hour. I'm Charlie Pellett. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We go to Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Ukraine is appealing to Western military leaders to provide tanks to Kyiv without delay. During a meeting today in Germany, the NATO allies did commit to sending more military equipment to Ukraine, but not tanks. Yuri Sak, an advisor to Ukraine's defense minister, tells Bloomberg tanks are what they really need.
The decision has not been reached today at Lunchtime, but we will not stop at advocating and further talking to our partners about providing Ukraine with tanks, because there is a very deep understanding that Ukraine is now fighting not just for our territory, not just for our people. We are essentially defending an eastern flank of NATO.
Yuri Sak says they want to be one step ahead of the enemy, not one step behind. Attorney General Merrick Garland says the Justice Department is stepping up its efforts to combat the flow of fentanyl from Mexican cartels to American cities. Bloomberg's Irv Chapman has more from Washington.
Speaking to the U.S. Conference of Mayors, Garland said drug enforcement agents are targeting the two cartels that run the illicit trade.
This includes disrupting the flow of precursor chemicals coming from the People's Republic of China to Mexico, and dismantling the clandestine labs where cartels use those chemicals to synthesize fentanyl in Mexico.
Garland listed a dozen successful prosecutions of fentanyl distributors and said agents have recently seized 379 million potentially deadly doses. In Washington, Irv Chapman, Bloomberg Radio.
White Americans are overwhelmingly benefiting from some tax breaks, including those aimed at investors. The government's first ever analysis of tax return data by race and ethnicity found whites get 92% of the benefit from the lower tax rate on dividends and capital gains. Other provisions like the Earned Income Tax Credit and Child Tax Credit are more evenly distributed. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
Thank you so much, Nancy Lyons, for that update. Really do appreciate it. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The sacrifices you made keeping your employees on payroll during the pandemic are not forgotten. Check the potential refund your small to medium-sized business may be eligible to receive through the Employee Retention Credit with no upfront costs. Learn more at getrefunds.com.
All right, one name we wanted to draw your attention to, Goldman Sachs, which we've seen the stock drop at its lows today, 3.6%, its lowest intraday level since October 28th. This is after Wall Street Journal, citing people familiar with the matter, reported that the Federal Reserve is investigating its consumer business, more specifically investigating whether the bank, Goldman Sachs that is, had the correct safeguards in place as it ramped up lending. This has been, we know Goldman has been really leaning in big time into its consumer side of the business.
Yeah, the agency also had concerns that the company didn't have the proper monitoring and control systems in the consumer business. It reminds me of a story that we talked about just a few months ago, Carol. Sri Natarajan and Hannah Levitt reporting for us here at Bloomberg News back in September that Goldman faces federal scrutiny of its money-losing consumer unit. Of course, Marcus, that's what it used to be called. It's since changed names. Fed officials said, they reported that Fed officials have been looking into the Wall Street Giant's online banking platform aimed at retail customers.
All right, so like you said, I mean, specifically it's compliance functions, audit, legal, concerns that the company didn't have the proper monitoring and control systems. Again, it looks like an investigation according to those familiar, so we will see, you know, how this plays out ultimately. But investors kind of weighing in, what is a bullish tone to the overall trade today? As you know, as you've heard from our market updates from Charlie, we've got a rally underway, broad-based rally, but Goldman is not participating in it. Again, down about 2.5% as we speak right now. Stock is down just about 0.4% so far in 2023. All right, folks, we're going to head over to our TV colleagues. Right now, we're going to talk about the markets. Bloomberg's countdown to the close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in this trading session. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Massar and Tim Stenovic. Welcome to our audiences across Bloomberg Television, radio, Quick Take, as well as on YouTube. And Carol, you're signed already, and I haven't even said anything.
I know. No, I love your mode on a Friday. There's like a little extra kick.
I'm looking forward to it.
Little spice. When does the bell ring? Okay, so what am I looking at? We've got quite a broad-based rally underway, and we've got some volume conviction behind it. In fact, last few minutes, it feels like we just took another leg up on those major equity averages. Also, some outperformance, again, on these Chinese names. Why do I go there? Because we have seen such a tremendous rally since late last year. It's up about 76% from October 24th. We're talking about the Golden Dragon China Index. It's up another 2.4% today. Alibaba continuing to trade higher. You know, we have a billionaire investor earlier in the week, Ryan Cohen, pushing it to buy back more shares. There's that happening. Yeah. And Baidu is also rallying. Check it out, almost 6% higher. Wait. This is ahead of the Lunar New Year holiday because, you know, because of COVID, there hasn't been maybe the consumer kick, people buying, outdoing things, and maybe that'll be different this year.
Tim, what is Carol going to talk about next week? Because we know Chinese market, mainland markets are shut all week.
If you listened to me last year when I started talking about these names, you would have made 76% from late October. I'm just putting it out there.
Is this a prospectus? Where are you going? You know, past performance is guaranteed.
I'm just saying the outperformance has been there and it continues to be there. I'm not saying.
I mean, it's just the second largest economy in the world. I don't know why you're looking so closely.
This is why I love my co-host.
Hey, I've been thinking a lot about layoffs, guys. You know, we continue to see day after day, week after week. Think about what we saw this week: Capital One, Microsoft, Amazon, and then just today, the news from Alphabet that it's going to cut 12,000 jobs, 6% of its global workforce. Alphabet shares higher by more than 5% today. Wayfair shares are cruising higher by 21.4%. This after the company said it's cutting 1,700 jobs, 1,750 to be precise. That's about 10% of its workforce, but it actually includes about 18% of its corporate employees. So it's eliminating some management layers and, hopefully becoming more agile. Investors are cheering this news, though.
Yeah, we go back to the broader markets. We talk so much here about the bond market was pricing in a recession, and the stock market was pricing in, of course, a soft landing. Then the last 3 days before today gave people some pause here. We saw that big pullback, and now that's being erased. The S&P up 1.5% here on the day. The Dow Jones Industrial Average up almost 0.8%. Keep an eye on the NASDAQ. Both the composite and the NASDAQ 100 now above 2% here on the day. And in fact, pretty much have wiped out all of their losses on a weekly basis. A holiday-shortened week, to be sure. But if this holds into the close, the NASDAQ 100 are going to be posting its third straight weekly gain here. Even the Russell getting in on the action, Katie, up 1.3%.
Remember when people said growth, wasn't going to happen anymore?
I do remember that. But in any case, you can really see the breadth of this rally, today's rally, that is, when you take a look at the sectors. All 11 sectors higher right now. You look at what's leading the way. It's communication services. A lot of that, of course, is coming from Netflix after they reported yesterday. But big tech right behind, up more than 2%. That sector, some of those big tech names rally. The relative underperformer is utilities. Remember, that's a pretty defensive place to be. So it makes sense on a day when you get this big risk-on momentum that utilities is your laggard.
Netflix, third biggest mover in the S&P 500 today, up about 8%. We should point out the two biggest movers, actually, SVB Financial and Signature Bank. The big drag on the market right now, biggest decliner in the S&P 500, that belongs to Goldman Sachs, down 2% on the day and more than 9% on the week. A really rough week for Goldman Sachs. Of course, the latest story coming out of the Wall Street Journal and the Federal Reserve looking into that company's consumer business practices. Eli Lilly has also been on the back foot here, and that largely has to do with some disappointing letter coming out of the FDA in Eli Lilly's, of course, efforts to get its Alzheimer's drug to market. And probably one of the big surprises of the day, at least to the upside, Ally Financial, up 19% here on the day. A lot of people thought this company was really going to get hit hard when it came out with its earnings, primarily because of a pre-announcement and some broader concerns here about softness in the consumer spending pace. But at least for right now, they appear to have it under control. Some of the loss provisions not quite as high as some people thought. And that gets back to the whole idea here, guys, about the shift in sentiment and some of the optimism that seems to be creeping back into this market, particularly when it comes to inflation expectations here, which have really started to moderate. And in fact, we have this
Okay,
idea
traders, hello again. I'm going to change order for Bitcoin even further to 21,176. 21,176. It will give us, look what happened. Let's see, 2760 plus 5%, 2.5%. 2760 plus 2.5%, 279, 21,279. Let's go, guys. 21,279. Because we need to make profit on it. Okay, stay safe, and I'll speak to you later, guys.
Month exclusive interview with our Mike McKee talking earlier. This is interesting. I mean, how do you guys feel about this? I mean, this point that consumers still have a lot of money, sitting around, whether that's money to spend, whether it's money to invest, and that continues to provide some momentum. Do we buy it?
It's still surprising for me to hear that. 2 years after stimulus basically ended, we're still seeing consumers have excess cash that can help cushion them against inflation.
Well, to answer your question, I mean, the data backs her up. I mean, they definitely have it. I mean, the question is, I guess, when does it run out? There's also, though, the bigger issue, too, and I think one reason why you had so many recession fears, it wasn't just whether consumers had the capacity to spend, but also whether they had the willingness. If they were too afraid to sort of go out there and spend that money, that in and of itself could end up leading us to a recession.
But weren't they spending it all at Wayfair, in all seriousness, ordering, new beds and new furniture, and that's why companies like these are doing layoffs, because they're not seeing that demand right now.
Well, don't forget, we're going to get those GDP numbers for the fourth quarter, obviously backward looking, but also, of course, baked into that are the personal spending numbers, PCE deflators, which I'm going to be more interested in. It'll be interesting to see what that shows.
Especially going to be keeping an eye on personal spending after we got retail sales this week, a bigger contraction than expected. And of course, that just upped the ante on sort of that overarching fear that the Fed could overdo it when we talk about
okay, guys, look, I'm trying to place 4%. It's 21,591. It will give us 4% in profit. What it means, 4,000 pounds. Okay, 4,000 pounds. If the price will move to down to this direction. So if you trade Bitcoin, if you copy my trade, please do so. Please place your stop loss at 21,591. Stay safe, guys. I'll speak to you later.
I'm going to stay late.
All right, guys, we will be back to count you down, wrapping up the trading day and the trading week. Beyond the bell, join us at 4 p.m. Wall Street time. It was eye-popping. I think we all had to look at it a couple times to say, is that right? Because it just blew away that estimate of 4.5 million, that average estimate of Wall Street analysts. It was a big deal.
It was. Investors pretty much shrugging off the fact that they missed on the bottom line, and missed pretty significantly, as long as they saw that, 7.7 million new subscribers. There was also, Carol, that what JP Morgan noted, quote, a seamless transition to new leaders as co-founder Reed Hastings dropping the CEO title.
All right, so let's get to it. Bloomberg News senior executive editor of global technology, Brad Stone, writes about how Hastings' journey would make for some binge-worthy TV. It's a great headline. Brad is the author of The Everything Store. He's also the author of Amazon Unbound, knows so much about the space. He joins us via Zoom in our San Francisco bureau. So, Brad, good to have you here. When you saw the headlines cross, I mean, there was so much coming from Netflix last night, but let's talk about Reed Hastings and his journey. How did you start to think about that?
Wow. I mean, like the end of an era. I mean, how many first-generation internet CEOs are still running their companies? I don't
Does Mark
know.
Zuckerberg count? Is that first? That's not first gen,
No,
right?
I would call him a second generation.
Yeah.
But Reed co-founds the company in '97 and takes it over from Mark Randolph, his co-founder, soon after, and has led so many incarnations of Netflix, from sending out those red envelopes to introducing streaming as an add-on to making streaming the core business to leading the world in producing original content. And and I don't know that he gets enough credit for being one of the innovators of our era, someone who foresaw this future way back in the 90s. It's why he named his company Netflix, even though it was a DVD by mail firm at the beginning.
All right, Netflix was a pretty good name, especially in hindsight. You know what wasn't a good name, Brad? Quickster. And I bring this up because you, and this is actually about the time I started, paying attention and covering Netflix. It was back in 2011. And I remember, it was a very sobering moment for Reed Hastings and I think Ted Sarandos as well. I remember a video that they made essentially apologizing to customers after they made this decision to split these businesses off into two different businesses. What I'm trying to say, Brad, is it wasn't without its speed bumps, like any sort of good drama.
Right. Yeah, in my story today, I describe it, the Quickster saga, as one of those 80s sitcoms that inexplicably changed its cast for one season. For whatever reason, the Dukes of Hazzard popped into my mind as I was writing. But look, I mean, that was a funny episode, and the stock crashed. They were probably, drinking the Kool-Aid of too many Harvard Business School studies. But speed bumps, I think, if that's the word you use, Tim, there have been mistakes, and clearly they let things like password sharing go on for too long, and they overlooked, I think, the appeal of ad-supported, inexpensive streaming plans for too long. They said they were never going to do it, now they're doing it. But those are all footnotes to a tremendous accomplishment over the course of 25 years. Reed Hastings kind of willed this industry into existence. Everyone has followed him. Companies like Disney and HBO and Apple are years behind them, maybe even a decade. And, I think him moving on from CEO to executive chairman is a moment to acknowledge the accomplishment.
I do wonder, too, Brad, I think about timing, right? It's like being in the right place at the right time, or just knowing when to kind of go all in on something. And even despite some missteps, it feels like he called a lot of things right, whether it was, kind of building out the streaming, waiting for the proliferation, as you write, of broadband internet access, knowing when to kind of go into some warehousing, right, to have stuff available for when he was trying to get the envelopes out. So it does feel like he just was really good at timing.
Yeah, up until recently, as they've been expanding into other countries at breakneck speed, introducing content from South Korea, from Germany, from Israel, spreading it across the world, making our world a little smaller, I think, by introducing these programs and popularizing them. And then I think, you guys started by talking about the increase in the stock price. And yeah, it's definitely subscriber growth. But, I think it's also this sense that with shows like Wednesday, which my kids love.
I heard it's good.
And the Glass Onion movie, which we love, like that Netflix still has its finger on the pulse of culture in a way, certainly, that I think rivals like Amazon maybe don't.
One thing that surprised me, Brad, and I'm really eager to hear your thoughts on this, was the fact that they also elevated someone else to a co-CEO role to sit there along with Ted Sarandos. And, I think a lot of us saw it coming, as soon as they elevated Ted Sarandos to a co-CEO role along with Reed Hastings a couple years ago, that perhaps Hastings would be stepping aside soon. What I didn't expect was, a Hastings continuing to be executive chair of the company on the board, executive chair on the board, and then also two co-CEOs.
Right. Yeah. Well, Greg Peter is a longtime product guy, tech guy at Netflix, very much indigenously Silicon Valley, worked at Macrovision and Red Hat. And look, Netflix has always been a company that straddles two industries. It is Hollywood and it is Silicon Valley. And in that respect, I think the co-CEO arrangement has always worked very well. And the fact that Reed isn't moving on and they've elevated all these people, they just have a lot of experience there. And it's probably one of the things that has reassured Wall Street that this transition has been so seamless and well thought out.
Yeah, I love that aspect. Because if you look at, after the news, I was reading both of their bios. I mean, I knew of them generally, but not like they're two different individuals, right, Brad? So this is a way of the company can kind of run on all cylinders in two different directions, which is, you would assume, be great growth for them going forward.
Right. And I have to say, like, as I've suspended, my journalistic skepticism to praise Reed Hastings at this moment, another tremendous accomplishment has been identifying and elevating Ted Sarandos. I mean, his bio is amazing. He dropped out of college to go work at a video store. And, and this is really the executive responsible, I think, for seeing the coming wave in original content produced by streamers. And he was lobbying Reed for years before they finally produced that first season of House of Cards, and was very prescient. I mean, everybody has followed in his footsteps, and Sarandos still, is someone who seems to reliably pick the winners.
And it all comes, back to, right, him being the man in Hollywood. Like, he's Netflix's guy in Southern California. It's this tech company, but it's also this Hollywood company. And the reason I bring that up, Brad, is because I believe it was in your second book, Amazon Unbound, Jeff Bezos and the Invention of a Global Empire. You talk about Amazon's moves to Hollywood and Amazon's attempts to get into Hollywood. How has Netflix succeeded so well, and where does Amazon stand right now?
Yeah, I mean, look, Amazon has caught up in some respects. It's a different business. It's integrated into Prime. They were earlier on the ad-supported tier with their IMDb franchise. It's now called Free TV, I think. But they've never managed, I still think to this day, to replace the kind of taste making that Ted Sarandos does. And they struggled. They've replaced their Hollywood leadership, wholesale at least once. But even today, I mean, you look at the hits on Netflix and the cultural conversations they stir up, and maybe the only thing to compare to is HBO, and Amazon I don't think is really in the same conversation. So yeah, I think Amazon struggle. I mean, I've reported in both my Amazon books that Amazon for years tried to buy Netflix, and Reed would never sell, and I think for a good reason. Netflix is more indigenously Hollywood than Amazon ever has been or could be.
Brad, I forgot, right? When streaming started, or I think about Netflix, it wasn't necessarily about creating your own content. It was just picking up other content from everywhere else, right? And just getting it out. I forget that.
Right, and that was the road that led to original content, because as they were licensing shows from the likes of Sony and MGM and Warner and the other studios, that became a pretty good revenue stream for the studios, and the cost started to go up. And you only had to look at the licensing costs if you're at Netflix or Amazon Video on Demand or early Prime Video to realize, hey, this is not a good business. This is unsupportable. But the way to make it work. Oh, and by the way, all those studios might eventually go into competition with us, like Disney,
exactly.
And control their own customers. So the way to guard against that is to start making your own TV shows and movies.
Hey, 20 seconds, Brad. How involved do you think Hastings will continue to be as executive chair?
I think he's going to follow the Bezos playbook a little bit and let it run. He said he's going to focus on his philanthropy and other interests. I would expect he'll be an involved board member and gradually leave things to Ted and Greg Peters.
All right, we're going to leave it on that note. Brad Stone, thank you so much. Have a great weekend. Brad is Bloomberg News Senior Executive Editor of Global Technology. Check out his books. If you haven't read them, shame on you. The Everything Store and also Amazon Unbound, really following the trajectory of Amazon, but just some great insight on Netflix. Just looking at the stock, it is top in the NASDAQ 100 and the S&P 500. It is up 7.6%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. I'm Charlie Pellet, and we have got stocks just about close to session highs. We check the markets all day long at Bloomberg. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Stocks with a bid today as tech leads the way. Dow's currently up 280 points. S&P's gained 66, and NASDAQ is higher by 306. The U.S. 10-year yield at 3.47%. Gold is down 2. Oil trading in the green. And Bitcoin is higher by 4.4%. Among the main 11 S&P sectors, all were trading in the green, led by gains in tech, telecom, and consumer discretionary. Leaders in the Dow, Disney, and Microsoft, while Goldman Sachs fell 2.5%. And led to the downside. After earnings, Netflix rose 7.5%. State Street climbed 4%. And regarding Goldman Sachs, the stock plunged intraday on a Wall Street Journal report that the Fed is investigating its consumer business. Wrapping things up, Paul Singer's Elliott raked in a record $13 billion last year. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type squawk. SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So one of the stories we did want to get to is in the crypto world, because late last night, the cryptocurrency lender Genesis Global filed for bankruptcy, the latest firm to collapse in the aftermath of the FTX exchange's swift downfall and last year's rout in digital assets. I mean, it was something, safe to say, Tim, we were kind of expecting.
Yeah, we were. And still, it didn't pummel crypto markets like the implosion of FTX, but it still features a list of top creditors with similarly large claims topping $3 billion in total. It was also something that our team here at Bloomberg News reported was likely to happen earlier this week, and sure enough, it ended up happening. For more, we turn to digital currencies and venture capital reporter Hannah Miller, who joins us from our 960 studio in San Francisco. Hannah, good to have you with us this afternoon. Thanks, as always, for joining us on All Things Crypto. We really do appreciate it. So this was expected, but sort of only expected in the last couple of weeks. It turns out that, this kind of goes back all the way to Three Arrows Capital and what happened last spring. Take us into it.
Yeah, so Genesis has had liquidity issues since the collapse of Three Arrows Capital. It's been dealing with these problems ever since then. So I think there's been a lot of preparation for this bankruptcy happening. Still, there are high-profile creditors, including Gemini, the crypto financial services firm founded by Tyler and Cameron Winklevoss.
So you know what, Hannah? I have to say, the story came across, and I'm like, all right, another shoe to drop.
I had to sell it to you this morning. I was like, we got to do this.
I'm like, why do I care? Okay, I mean, it's important. Don't get me
wrong.
I
said, don't ask me. Ask Hannah Miller.
But it's like, I do feel like every time there's a story, I want the whiteboard to understand the connectivity between some of these different firms, because I do feel like there's firms that were like, hey, we're working with you, and now you're my enemy. So how do you fit this piece into kind of the bigger crypto policy puzzle, if you will, and the crypto fallout that we've seen?
Well, I think this hits a really key sector of the crypto industry, which is lending. Lending was super white hot last year. We saw a lot of companies promise these really high yields, and it's also been one of the weakest areas since the market downturn. So with Genesis filing for bankruptcy, I think there's a lot of uncertainty here on how lending is going to play out within crypto and whether this is still going to be an active business.
Okay, I'm sorry for my stupid question, but Hannah, remind me. So what was a crypto lender? What did they do?
So basically, you could give your crypto over to them, they would invest it and promise you really high yields on that investment. And I don't think anyone really accounted for the steep downturn in coin prices. So
can I just say, really idiot? Can I just say idiots? I mean, everything goes up and down, right? No, Hannah, like this is.
But Carol,
because I'm listening to you explain this business, and I'm saying, how could this be sustainable?
To your point, Carol, and Hannah, please jump in, because this is certainly your expertise.
It's a Friday, Hannah.
No, I think you're absolutely right, Carol. And a lot of times people don't ask those questions as prices continue to go up. But you had real businesses built that are no longer existent in their forms as just a few months ago. Right. BlockFi, for example, right? It's in Chapter 11 right now. And Hannah, it's pretty remarkable to see, and look, I completely agree with Carol that in hindsight, it's like, wait a second, obviously there's no such thing as, just yield, right?
Yeah, well, I think what happened here was there is this absence of regulation within the crypto industry. These are investment products that weren't necessarily subject to securities laws, and investors were kind of left in the lurch. So I think moving forward, these cases, BlockFi, Genesis, are going to be fodder for the SEC to step in and actually rein in this industry.
Because I think what's interesting, Hannah, is we watch, and I'm sorry, I know I'm going a little crazy on you, but some of it, you hear it and you're like, what? But I mean, I think we're starting to realize that as much as crypto could maybe move us forward in a big way, or blockchain, at some point we do have to have some rules and regulation and oversight, right? Just to make sure nobody gets screwed, essentially.
Yeah, 100%. And, I talk to founders and VCs all the time who do want more clarity in the industry because they want to know, what they should invest in, what this industry is going to look like in the next few years, because right now it's unclear.
Well, speaking of unclear, I'm unclear about what this all means for DCG. That's Digital Currency Group. It's the parent company of Genesis. The man behind it is Barry Silbert. You might recognize his name, or DCG, because it's the parent company of Grayscale, CoinDesk, which interestingly enough was the company that broke the original
Whiteboard,
FTX
please.
story. Yeah, I know, you kind of do need a whiteboard.
The document.
It's actually a really good idea. Foundry, TradeBlock, Luno, plus a ton of other investments as well, Hannah. So what does all this mean for Digital Currency Group?
Yeah, so DCG has been a powerhouse in the crypto industry. Barry Silbert is a major figurehead. So the fact that this company has had so many problems is really upsetting to the industry at large. And, Barry Silbert has traded barbs with Cameron and Tyler Winklevoss. People want answers about what happened here. So again, this is just further shaking confidence within the crypto industry and really casting a lot of uncertainty on the industry more broadly.
So I think when people see a headline like this, they perhaps connect it to FTX, but like you've written about and like you told us, it's more connected to the collapse of Three Arrows Capital in the earlier part of 2022. If we think about contagion, what do we need to be watching for next? And does the contagion continue?
Yeah, so I think it's going to be interesting. We do know these creditors for Genesis. Some of them are big names, including Decentraland, which is this virtual Web3 world built on blockchain. So it's going to be interesting to see, how this contagion spreads, who gets affected.
Wait, what is the connection to Decentraland?
Decentraland is a creditor for Genesis. Yeah,
that is so surprising to me. Why would a company that is trying to build sort of a real estate of the metaverse give money then to a company like Genesis?
Yeah, it's very interesting. And again, it shows this sort of confusing, tangled web within the crypto industry. Everybody is connected. And so the contagion here, it's unclear where the limits are. Everyone is connected to everyone. So that's basically it.
Listen, Hannah, if you had your dream interview right now, that you could sit down with somebody right now to kind of maybe get that really big, I don't know, that would maybe help answer something, and that person had to be just completely, drank some truth serum and had to tell you all the truth, who would it be?
I think it would have to be CZ over at Binance. Binance is a major player. It's the top crypto exchange. And, I think there are a lot of questions over, how Binance is going to move forward and whether, there are similar issues at Binance that there were at FTX. So I think CZ is definitely someone whose brain I'd like to pick.
What happens to Binance? I mean, this is a company that was seen at one point as perhaps coming in and buying FTX. That fell apart in a number of days. What happens to Binance?
Yeah, so I think really what's hurting Binance right now is, regulators are looking into it. We've reported this. There is sort of this uncertainty about its business practices. And, there are also just, I think, a lot of people within the industry who are suspicious of centralized exchanges like Binance because of the collapse of FTX. And CZ is also just, such a powerful figure within the industry. So I think a lot of people are looking at them for answers. And I think also Binance is a huge part of the crypto industry's future and how that's going to play out.
Well, speaking of the crypto industry's future, you and Sonali Basak have a story about the ex-FTX US president, Brett Harrison, somebody who we used to interview all the time when he was over at FTX US. And he left FTX a few months before the collapse of the company. And remember, he was at FTX US. He's already been able to raise new money for a new firm. And speaking of everything being interconnected, Hannah, like you said, Coinbase and Circle are some of those investors?
Yeah, some big names have jumped on board here with Architect, which is Brett Harrison's new venture. And this is a startup that's working on creating, trading infrastructure that can help institutional investors more easily access both centralized and decentralized markets. So we're talking DeFi here as well. And it's been very interesting to see that he raised $5 million for this startup at a time when venture capital investing in crypto has plummeted enormously compared to last year.
But Hannah, he did. Bloomberg News reported last month that he initially aimed to raise as much as $10 million at a $100 million valuation. So he had to kind of do a reset on his expectations, right?
Oh yeah, he had to lower expectations. It's pretty clear. And he has spoken publicly about how it was a bit challenging to raise both before and after the collapse of FTX, and that some investors were a little worried about bad publicity about if they ended up backing a company founded by a former FTX US executive.
But he raised $5 million.
I was just going to say, he got it done. He got it done. He was able to pull it off.
Oh, Hannah, we love you. Thank you for playing along with the crypto game. But it is interesting and to get your insight because we are all kind of finding our way through it as we see more and more information come out. Hannah Miller, she's killer, digital currencies and venture capital reporter at Bloomberg News, joining us from San Francisco.
All right, well, looking at markets right now, we're still seeing highs on the S&P 500 of 1.7%, so close to session highs. The NASDAQ higher by 2.5%, Carol.
All right, right now it's time for a check on world and national news. It's off to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. The U.S. and our NATO allies are committing to send additional shipments of heavy equipment to Ukraine, but tanks are still not on the list. Yuri Sak is an advisor to Ukraine's defense minister. He tells Bloomberg Balance of Power tanks are an urgent need.
We are at a stage of the warfare in which missile terror continues, in which Russians continue to pulverize our cities. So time, like our president, Mr. Zelensky, said, is not on our side, and time is used by Russia as a weapon.
Yuri Sak says Ukraine needs to be one step ahead of Russia, not one step behind. The White House says Russia is employing thousands of mercenaries from the Wagner Group, a private military company, to fight in Ukraine. National Security spokesman John Kirby says Wagner is guilty of committing atrocities and human rights violations, and the Biden administration is designating the group as a significant transnational criminal organization.
It will broaden the network of nations and institutions that will be able to stop doing business with Wagner.
Kirby says more sanctions against Wagner will be announced next week. The March for Life rally in Washington is drawing crowds in its 50th year. Group President Gene Mancini welcomed those who turned out.
Over the course of the past 50 years, the March for Life has become the largest human rights demonstration worldwide. And while the march began as a response to Roe, we don't end as a response to Roe being overturned. Why? Because we're not yet done.
Gene Mancini says they're now pushing Congress to pass a nationwide ban on abortion. President Biden marked the 50th anniversary of the court's original decision by renewing his administration's commitment to defending reproductive rights. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Okay, traders, let's move on and let's place stop loss for Bitcoin. 1 extra percent. It's 21,798. It will give us 5%. If you will translate into money, it will give us 5,000 pounds. 21,798. Some of people probably think, well, we should follow this guy trade yesterday, right? Don't worry, it happened every day. So if you want to trade like we do, so get the strategy and you can trade the same way as I do. You can find it on company.co.uk, or you can register for webinar, live webinar, and I will tell you, I will explain everything, how I trade, how I make profit, where to place stop loss, etc. Okay, stay safe, and I'll speak to you later. It's not the end. We're already 5% in profit with Bitcoin.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. I'm Charlie Pellet. Stocks are holding near session highs. We check the markets all day long at Bloomberg, and this update is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. See if your business is eligible for employee retention credit assistance with the team at Innovation Refunds. They help make the process easier and less stressful so you can focus on your business. Learn more at getrefunds.com. We've got 19 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ very close to session highs right now. The S&P is up 65, a gain of 1.7%. We're seeing a tech rally. NASDAQ up 267, up 2.5%. The NASDAQ 100 index up 2.7%. The Dow is up 280, a gain now of about 0.9%. 10-year yield 3.48%, with the 2-year yielding 4.17%. Spot gold 19.28 the ounce. West Texas Intermediate crude up 1.2%, 81.31 a barrel. So it is an up day across the board. Kansas City Fed President Esther George, who's retiring this month, says officials do not want to raise rates by so much that policy becomes overly restrictive and the economy can avoid a sharp downturn. She spoke this morning with Bloomberg Radio and told us she wants to see progress on labor.
What I'd really be looking for is to see, are some of those job openings going to come down? Will we see some of those vacancies removed as we see this imbalance begin to be addressed? So I think this scenario of can there be a soft landing is one we would all want to see, and there are some possibilities for that.
Google parent Alphabet, speaking of jobs, cutting about 12,000 positions, more than 6% of its global workforce. Alphabet shares parent of Google up now by 5.3%. Also cutting jobs, the online furniture retailer Wayfair, it's cutting about 1,750 positions, or 10% of its workforce. Wayfair shares surging now by 20.9%. Recapping, 10-year yield 3.48%, S&P up 1.7%. And that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, under 18 minutes, call it 17 minutes right now to be exact, until we get to wrap up the Friday trading session and the week overall. We've got a definite rally underway, and I got to say, Tim, a lot of it's about the tech side.
Well, here to talk about, well, maybe a little tech, but more about value. We got Cole Smead with us. He's president portfolio manager at Smead Capital Management. He's here with us in our Bloomberg Interactive Brokers studio. Cole, good to have you with us. How are you?
It's good to see you guys. Good to be back in the city, too.
Nice to have you here.
Well, the Smead Value Fund, it continues to consistently beat just about all of its peers in the past year, and over the past 5 years, returning on average around 10% annually. What's 2023 going to look like?
Wait, can I ask you first of all? I'm sorry.
That's fine, Carol.
I
Do your
know.
thing.
Tim is like so patient with me. How much of the outperformance as of late has been because of energy? Because you guys seem to be all in.
It's big. And here's the weird part. Wall Street tends to be a copycat game, right? Something starts working, people copy it. Just kind of the nature of the beast. Dogs chase cars, people chase stocks. And what we find really interesting, and all our meetings, I've been doing meetings for the last 3 days here, people are asking that same question. In other words, why do you own so much energy? But what's weird is they're not running after it like they normally do when stocks go straight up. They ran after tech at the end of the bull market. Congratulations, they did that. They're not doing it on energy yet. It kind of shows you how much legs this bull market in energy and energy equities really has, I think.
Why are you so confident that energy still has room to run?
Just because it's scarce, right? So, like, let's say you go out to a value shop and then you say, like, what do you own in energy? They're like, we're really bullish. We own 8%. That's nothing. To quote the Monty Python, 'tis merely a flesh wound, in our opinion. Versus,
what's your percentage exposure?
About a quarter of our portfolio.
Wow.
In our international, it's even bigger depending on how you categorize it. So I just think there's interesting dynamics. Supply, tight. No one's producing new. Look at the futures curve. Go onto your Bloomberg and pull up, the backwardated futures curve right now. And what that shows you is that someone in 3 years isn't going to go out and sell into the open market of futures because the price is lower than right now.
So it has to do with some of these big integrated guys maybe aren't necessarily doing mega investment to build it out anymore because they do see the long game as to kind of where the world is going. But that long game is still perhaps decades away before we do that really significant shift in terms of where renewables are really what it's all about.
Yeah. So
is that it?
Use what Sheffield said about a week ago from Pioneer. He said, listen, we're more likely to see 150 than we are likely to see 70, as an example. That's just a probability distribution.
Price of oil you're talking about.
Correct, yeah. But here's where I'm getting at. What's weird to us, animal spirits have to be present, okay? And is Chevron trying to go out and consolidate the world? Is Exxon trying to go out and consolidate the oil patch? No. Really, this PTSD from the prior era. Why do the stock pickers not want to own this yet? Because they've been so damaged. They've told their investors, we'll never do that again.
It's very cyclical, or it has been.
It has been, yes.
What did it tell you? I mean, this is like answering my own question, but Warren Buffett getting into Occidental last year. Like, what did that mean to you as somebody who's, long been bullish on the space?
Well, that just means we're right.
Yeah, I mean...
I say teasingly, but here's the deal. So Buffett in the 70s.
So far.
He closed, Buffett closed his partnership in 69, said go to Sequoia Fund, buy muni bonds, or go own Berkshire. Now go look at the 70s. Buffett got damaged in the first 5 years of the 70s. Relative to the S&P 500 too, oil killed it. Buffett ended up having a great 1970s era, but if you look back, Charlie Munger is always like, hey, here's the deal. I want to practice ignorance avoidance, and to use a Munger line, he wants to sit on his butt, but he uses an A word instead. They're just going to sit on their butt and own oil. It's easier. To your point, why fail?
But it does feel like you know, Tim's heard me say this. I mean, I remember going up to the Bakken when it was all about shale, and it was crazy.
What year was that, by the way?
It was 2009 or 10.
Which was roughly the top of the market.
It
compared
was
to now.
nuts.
Yeah.
And what was interesting is I remember going to a local diner and saying, you know, tell us about this. You guys are so busy, blah, blah, blah. The locals were like, we've seen it before.
Yep.
And it just said to me, and I feel like the oil industry has learned that, and they're not going to be running in to really amp up supply or make those big investments that take a while to pay off.
Well, correct. So, like, if you go to the Wall Street analysts right now, they say, well, look at the cost of equity or cost of capital for these businesses, and they say it's really high. But if you're Vicky Holub running Occidental Petroleum and you create all this free cash flow, your cost of capital is actually your marginal opportunity cost. So I just say that because I think the models are wrong. I was visiting with a journalist earlier, and they said, oh, you know, well, what's the market implying? And I was like, well, you're assuming the market's right. And I think that's the whole discussion. People are using PE multiples on these stocks. No. Return on equity relative to the price to book you're paying. We're talking, Oxy produces Accenture-like return on equity, but go look at the price to book multiples. Which one can you grow your capital quicker in? That's what Buffett and Munger get.
All right. So you're going to stay in with the energy.
Well, I'm wearing cowboy boots in New York, so I think we're going to have some fun with this one.
Done. Okay.
Home builders.
Yeah. Oh, it's a great question. So the home building business, all the analysts are trying to predict short-term things.
We should note that Lennar, D.R. Horton,
And NVR.
are also
yeah,
in the top 10.
are on the portfolio. So here's what we love.
Not only in the portfolio, but top 10, right?
Yeah, they're well, about 12% of the portfolio right now
Okay.
in the U.S. fund. So, you know, go back to 2011. It was a depression in housing.
Is this supply and demand again?
Well, do higher rates fix supply? And the catch is no. It actually retards supply, if anything. So I look at this as like, you know, we were talking about
another supply demand.
It is. It's an imbalance. But like, you know, using your brother as an example, Tim, since I'll give him a shout out, is he married yet? Does he have
married,
kids?
Yeah, he's got 3 kids.
Okay, and by the way, he's 37, which makes sense.
Yeah, Cole and my brother went to college together.
Yeah. So, but at 27, it doesn't, especially here in New York, by the way. So what if I told you that like most cities are in a fishbowl? It's a fishbowl that we live in, and by the way, we don't see real America.
No, it's fair. It's fair. It's why I think it's always important. Like when Tim and I go on the road or something, we're out in the middle of like this.
And you learn something.
You do. You learn a lot.
A question, by the way, Phoenix, Arizona is a great petri dish of suburban America.
Yeah.
Right? We're along malls is another place, super contentious. You show up in a meeting in New York, you're like, malls. And they're like, what?
We didn't get to ask about Target. Wasn't that one?
Yeah.
Darn it. Come
Next
back
time,
soon.
Cole.
Yeah, I will.
Cowboy boots and all. You can come back.
Yeah.
Safe trip home. Cole Smead, President Portfolio Manager at Smead Capital Management, here in our interactive broker studio. As we mentioned, Smead Value Fund beating just about all of its peers over the past 5 years. You are listening and watching Bloomberg Business Week.
8:53 now on Wall Street. I'm Charlie Pellet with today's company headlines. Goldman Sachs shares trading lower. Right now we've got Goldman Sachs down by roughly 2.5% after the Wall Street Journal, citing sources, reported the Federal Reserve is investigating Goldman's consumer business, Marcus. The Journal says the Fed is investigating whether the bank had the correct safeguards in place as it ramped up lending. Google parent Alphabet is cutting about 12,000 jobs, more than 6% of its global workforce, becoming the latest tech giant to retrench after years of abundant growth and hiring. CEO Sundar Pichai told employees in an email the cuts will affect jobs globally and across the entire company. With the layoffs, Google joins a host of other tech giants that have drastically scaled back operations amid a faltering global economy and soaring inflation. Meta Platforms, Twitter, and Amazon have all slashed their ranks. Today, we've got Alphabet higher on that news, up now by about 5.5%. The online furniture retailer Wayfair is cutting 1,700 jobs, 10% of its workforce, becoming the latest company to seek to bring costs in line with a new economic reality. Right now, Wayfair shares are surging by 20.1%. And Vox Media, the publisher of properties like Vox.com, Eater, The Verge, and New York Magazine, is laying off 7% of its workforce, citing a tightening ad market and an economic slowdown. And those are the company stories we're following this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you're listening and watching Bloomberg Business Week. We are definitely in Friday mode, and
that's true.
Just gonna say, let's talk about Jamie Dimon's pay. Can we do that?
We can.
Because we started. We
talked a little bit about it yesterday.
Yeah,
because
like
the news
headline.
broke after after the market closed. The J.P. Morgan Chase and Company kept CEO Jamie Dimon's total comp at $34.5 million for his work in 2022.
No inflation-adjusted income anywhere?
No, but at 34.5 million.
It'll be okay?
I think he'll be okay, yeah. It was, though, some context here, Carol, a year in which the firm's profit fell by almost a quarter and the stock notched its worst annual performance in over a decade.
Yeah, the board also vowing to stop granting Jamie Dimon special awards after shareholders expressed frustration in the wake of a more than $50 million retention package announced in 2021. For his work last year, the board granted Dimon a $1.5 million salary and $33 million in performance-based incentive compensation, according to a regulatory filing. The panel considered his performance as well as feedback from investors at the last annual meeting, it said in the filing. Having said that, you guys know we do a lot of stories. He is often the voice on Wall Street that everybody wants to hear from because of his long tenure. He is the last big bank CEO that is still there from the financial crisis, still running the major bank that he did back then.
Yeah, let's go into some of the financials here, Carol. Profit for JP Morgan shrunk last year 22% to $37.7 billion. It did drop from a record. The drop was driven by something we've been talking about for months now, that slowdown in deal making, as well as provisions to cover potential bad loans. The bank had released reserves in 2021 after expected massive losses tied to the COVID-19 pandemic. Those never materialized.
And what's interesting, I guess some people are like, well, wait a minute, he's making this kind of money, bonuses are being cut back and some, like we're all trying to make sense of it. I don't know if there is any sense when it comes to sometimes money on Wall Street.
Yeah, I did find it interesting.
And these people who run it.
I do find it interesting the move in reaction.
Hello guys again. I need to place stop loss even higher at 22,000 to 1.4. 22,000 to 1. Actually, I can't. I will place stop. Let's see. Plus 5.5%. 21,902. 21,902. It will be 5.5%. It will give us 5,500 pounds. 902. I'm trying to sell it today. I don't want to keep it overnight. I mean, over the weekend even, because you never know what's going to happen. and it might be gap, and it will jump substantially down. So just eliminate this risk. I need to make sure that I will make maximum profit today from trading Bitcoin. Stay safe, guys, and I'll speak to you later.
I wanted to ask you, what about the options expirations? Do you think that's at play here to see this kind of momentum? I mean, it's supposed to be what, the biggest January event in a decade. That's got to do something.
Yeah, and you see, I think Katie was just talking about this here about the volume that we've been seeing, right?
Yeah, absolutely. 16% above the 20-day average, at least on the S&P 500. And things really picked up just in the last hour as we get to that closing bell.
Okay, so I'm thinking about catalysts as we get to next week, because I think it's fair to say we saw some catalysts earlier this week coming from Federal Reserve speakers in the way that some people interpreted some of them as dovish. Yes, I said that, and I think that's fair. They have a blackout period that starts this weekend.
Yeah.
So that's it.
That's it.
That's it. Yeah. We're not going to hear from them next
How
week.
are we going to know what's going to happen?
I don't know what am I going to do?
I don't know. I don't know, Tim.
Journal.
Yeah, no, don't worry. There are plenty of earnings that we'll get to. Don't worry. We have plenty to do.
You know, but in all seriousness, though, we talk about kind of the flip-flop, right? I mean, a couple of months ago, really, just a few weeks ago, it seemed like a market that was really kind of pricing in the worst, and now it seems to be trying at least to price in the best. We talk about an S&P 500 that looks like it will indeed close above its 200-day moving average. And I was looking at just some of the individual names here. You have still something like about 60% of this index, you know, individual names that are now back to that 200-day moving average here. So even if we don't hit it on an aggregate basis, the fact there are been a lot of individual names moving in that direction, certainly positive on the day. And S&P 500, 39.72. We always wait for these numbers to settle, but that's going to do it, folks. Up 73 points on the day, up 1.9%, and yes, back above the 200-day moving average on a closing basis. The Dow Jones Industrial Average also higher by 1% on the day. The NASDAQ Composite higher by 2.7% on the day. And it looks like the Russell 2000, Carol, is going to finish higher by about 1.7%.
Yeah, I know we're going to get into sectors in just a moment, but the S&P, like most names in the index, 460 are showing gains in today's session. And Katie, if I look at the NASDAQ 100, 93 of those names are up. So as we said, broad-based buying today.
Broad-based buying. You can really see that when you dial down to the industry groups. I have a lot of green bars right here, which is a little bit fun because I wore red. But in any case, you look at what's doing really well. You have media up right at the top. We know that is Netflix. You also have autos doing well. A lot of that is Tesla, and chips doing well as well. So really risk on, and you can see it when you look at these specific groups. What's not doing too well, food and beverage, some pharma names as well, but still higher, Carol, on this very risk on day.
All right, I got to tell you, the equity key in my keyboard is coming undone because I've been hitting it so many times today. All right, so let's get to it. Let's get to some of the gainers. I had a lot to choose from, but I had to go to Netflix, finishing the day just off its best levels of the session, so that accounts to about an 8.5% gain. Top in the NASDAQ 100, top in the S&P 500. We know why that big net add of, 7.7 million new customers, helped out by the new ad-supported tier. And then I got to say, JP Morgan coming out with a comment talking about Reed Hastings stepping back as CEO. JP Morgan expecting the seamless transition to new leaders of Ted Sarandos, already co-CEO, and now COO Greg Peters joining in, just saying that it just kind of felt good. So I did want to point that out. Google, remember, I don't know if you guys saw this. It was top in the NASDAQ 100 yesterday.
It's called Alphabet now.
Yeah.
Yes.
The ticker, though, it's still Google.
I'm just, we like to be accurate, that's all.
All right, so they are Alphabet, forgive me. Up 5.7% after a 2.3% gain yesterday. The company we know cutting about 12,000 jobs, about 6% of its global workforce. Analysts saying the sharp cost cuts will help the company's earnings in a tough economic environment, which speaks to something Gina Martin-Adams said earlier. You know, if these companies are getting on top of cost cuts, it might help support some of those margins as we get through earnings season. Last one, SVB Financial Group. This one also top in the NASDAQ 100, rallying big time. I think it was the biggest intraday move since September 2008 or so. So a big move overall. Yeah. Earnings after the close yesterday, fourth quarter results, first quarter forecast for first quarter net interest income, both higher than analysts had expected.
Yeah. And I just want to just add one to your board, because I thought it was interesting. The rally that we saw in Ally Financial today was up 20%. Best day. Well, but it's a good read here, I think, on why we had so many fears in this market, because people were concerned about consumer credit conditions, consumer spending, and we know that Ally, of course, big auto lender, was kind of right at the epicenter of that. And the commentary that we got here showed that it's not that bad, and I think that really added to some of the sentiment in this market. Tim?
Okay,
yeah.
I'll take it.
I'm trying to figure out a new decliner, guys, because I'm in trouble when there's some green on the board. And fortunately, the crack team here at Bloomberg and our producers were able to get that for me.
Did you get an assist today?
I got an assist just now, guys. That's Faith Isbell. Shout out to Faith.
Thank you, Faith.
Thanks, Faith, as always. Hey, do you want to get to decliners? They were tough to find. In fact, I had to change one at the last minute that turned green, but I found 3 in the red. Goldman Sachs falling 2.5%. This after the Wall Street Journal, citing people familiar with the matter, reported that the Federal Reserve is investigating its consumer business, finishing down 2.5%. Goldman Sachs down more than 8% so far this week. Remember, we got earnings on Tuesday. A bigger increase in expenses than analysts expected was what the company reported. Eli Lilly falling 1.4% after a setback from the FDA for its Alzheimer's drug. And then we got Bed Bath & Beyond. And believe it or not, Romaine, I found some fundamental news as to why this stock is actually lower today.
Fundamental?
Yeah.
Okay, I'm ready.
Well, maybe it's not fundamental. Maybe I shouldn't have said that. It got a notice on January 12th from the NASDAQ. I know.
What are you doing?
Well,
you got to learn from Carol. Never,
Just
real. Okay, it's real news, I should say. It's real news. It doesn't have anything to do with the company's earnings. But the NASDAQ said that it's not in compliance with requirements for continued listing because it has not yet filed its quarterly report for the period that ended in November. It's got 60 days to do so. So keep an eye on the company until March 13th.
All right, let's turn to the bond market. I think we really haven't talked about it, but we talk about the Treasury sell-off here, kind of resuming here, at least on a daily basis. Now, we should point out on a weekly basis, as well as on a year-to-date basis, yields are still higher, still up, lower, than where we were a week ago. But on a day-to-day basis here, we're basically moving higher by about 5 basis points on the shorter end of the curve and about 8 to 9 basis points on the longer end of the curve. And this gets back to the idea here of the difference between what the bond and the equity markets are pricing in and the correlations, guys, that we had seen there. And an interesting write-up on the terminal today here about how some of those correlations might begin to start breaking down, particularly, Tim, I think as you were alluding to, we're heading into a pretty busy week, at least a week that could provide a lot of potential catalysts here, either up or down for the market.
Yeah, we got Microsoft on Tuesday. We got Tesla on Wednesday. All right, so get ready for those.
Yeah.
Thursday, we got MasterCard and we got Intel.
Yeah.
Friday, we got Chevron, and that's just to name a few.
And we also have some interesting economic data, even though we won't get to hear from the Fed members. I'm particularly broken up about that, but I believe we get GDP, we get PCE, so it's an embarrassment of riches when you look over the next 7 days.
But some key data points, right? PCE, we know this is the inflation metric that the Fed really likes to look at very closely. So we'll see whether it continues the trend to the downside, what we see on that. And I want to go to MasterCard because I think about what you said about Ally Financial.
Okay, traders, let's move further to 22,000 pounds. We will move stop loss. It will give us 6% in profit. Okay, 22,000, 6% in profit. In real money, that's 6,000 pounds. Okay, please move your stop loss and let's see what's going to happen. We still have 50 minutes to trade. Okay, guys, I'll speak to you later.
Before we get them, but to see kind of what those travel figures look like and spending numbers.
No, I mean, when we talk about, global economic, activity, I mean, this is an important one and certainly could, maybe change sentiment even globally, like we saw kind of what Netflix did to some extent, or Ally Financial did to our
I think also it's going to be an important sort of read on how the Chinese reopening is going, both in terms of how mobile actually people are and to Romaine's point, how much they actually spend, because there's so much optimism built on that reopening story, the demand that could be coming out of China. We're going to get an actual read on that.
You know what I'm actually looking forward to? By the way, it's Paris Fashion Week too. I wasn't invited, but you know what I'm actually looking forward to? Not really market moving, but I think it's interesting. The Senate Judiciary Committee is going to hold a hearing. Remember that whole Ticketmaster debacle with the Taylor Swift tickets back in what was it, November or something? Yeah. So they're holding a big antitrust hearing on that to basically ask, why there's only one place to buy tickets.
Do you anticipate we'll get some answers?
They have not released a witness list.
Do you think we'll get answers?
I just want to know who's going to show up.
As to why? Will people be able to get Taylor Swift tickets if they want?
if they show up to this hearing?
That would be good.
Maybe the lawmakers want to go to a Taylor Swift concert.
Yeah, maybe. I don't think our lawmakers are that cool, but
No, they're busy with the debt ceiling. Let's not forget about that.
Something else, right?
Guys, have a good weekend. All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Quick Take, Beyond the Bell, counting you down on this Friday. We'll see you again, same time, same place, on Monday.
Let it grow.
We mentioned that the new issue of Bloomberg Business Week is out on newsstands, on the Bloomberg, online at bloomberg.com/business. And in the solutions section of the magazine, Tim, there is a really important story, and our producer Paul Brennan brought it to our attention, a story on how big agriculture, is betting on microbes to solve the world's fertilizer problems.
This is all about the hunt for greener foods. With her story, let's go to Bloomberg News agriculture reporter Elizabeth Elkin. She joins us via Zoom from New York City. Good to have you with us this afternoon, Elizabeth. How are you?
I'm doing well. How are you guys doing?
Doing well, thanks. So tell us how this works. I mean, how do you figure out a way to create, well, a greener way to feed plants?
Absolutely. Yeah, it is a really tough one. And, you know, people have been working on this for a long time, and now we're gaining a lot of steam. So there are a bunch of different ways that people are doing it. One of the big ones that we highlight is obviously microbes, which are just like tiny little living organisms that already exist everywhere, you know?
Yeah.
And there are some companies that are making like basically like caffeine for microbes. So,
Well,
you know, like my morning coffee makes me, you know, like
right. And
better.
I think the reason why this
product theoretically.
Well, the reason
Yeah.
why this is so important is because the way that we feed plants today, it's not necessarily one that is, you know, you wouldn't call it green, right? What goes into fertilizer?
Yeah.
The natural resources. And then in addition to that, even if you do fertilizer in, you know, organic fertilizer, right? It's just not available at the mass quantities that are needed.
That's exactly right. Yeah. And, you know, on the fertilizer beat, like I get that question about particularly manure a lot. Like, why don't we just use manure?
That's what I meant by
instead of
organic.
using, like, yeah, right. These
But thank you for
synthetic,
going
Yeah, I appreciate it.
Of course. These synthetic products. And it's because, I mean, one, you're right that there's just not enough of it to use to produce the amount of food that we need for this massive growing population. And also it's because like it just doesn't have the nutrient content that the synthetic fertilizers have. So if you want to feed all of the, you know, many people in this world and all of the like growing number of people in this world, you can't just use manure. It's not possible.
You know,
So enter fertilizer.
It's interesting because Elizabeth, like, and I feel like we talked a lot last year about the rising cost of fertilizer specifically and how that was playing into food costs.
What was really remarkable about this, Carol, was the fact that it was such a result of the war in Ukraine and the way that the global supply chain or fertilizer is so reliant on this global supply chain working, Carol. It's like remarkable to kind of see how everything is intertwined.
Well, and Elizabeth, what's interesting too is then, you know, this, when things start to get expensive, right, I do feel like the world of innovation like wakes up and says, wait, we can do this better. Talk to us, just go back for a sec, about all the big macro factors that are going on that are saying for fertilizer, we've got to find a better way.
Absolutely, yeah. So even before the war on Ukraine, people were looking at this, like we talked about, because it's just not good for the environment the way that we do it right now from an emissions standpoint, and also because fertilizer runoff goes into rivers and streams and creates massive algae blooms, which not good for wildlife, right? So you've got that, you've got the environmental factor, and then you have that the war in Ukraine put almost a fifth of the world's fertilizer exports at risk. And so you get a lot of people who are realizing kind of all at the same time that fertilizer is incredibly important. And perhaps we never thought about it before, but it is incredibly important. And so you like people are really throwing money at this right now, particularly massive ag companies. And you've got, you know, a bunch of little startups and people are really, ag tech is really funneling money into this right now.
You said algae blooms, so I got to go there because this is where my brain went. Years ago when I got married, we went to the Azores for our honeymoon. And on the island where we were, there was one lake that had not been tainted by fertilizer. Every other lake was basically destroyed as a result of algae blooms caused by fertilizer. And the only reason this lake wasn't is because it was from a crater and the sides of the lake were too steep. The banks of the lake were too steep for cows to graze on.
Oh my
So nothing had been planted
Fascinating.
there. And it looked, this is what we were told there, by the way. So, you know, I would say don't go to air with it, but I just did. But it was really it's remarkable because this is happening all over the world, and it's ruining bodies of water in so many places.
Yeah, we see it all over the place, right, Elizabeth?
Absolutely. Yeah, you see it all over the place. And, you know, we talk about like an impending perhaps water issue, like fertilizer is part of that, right? And we need drinking water.
So what are the companies to watch here that are working on this? Because there are some familiar names in here.
There are, yeah. So Bayer, which a lot of people will know because of their work in like the medical area, but they're also a huge ag company. So Bayer is doing a lot of work and they're funneling a lot of money into startups. Yara is doing a lot of work. They're a European company, but they're like a massive fertilizer company. ADM's got some stuff, which is a huge ag trade.
Archer Daniels Midland?
Yeah. Okay. Archer Daniels Midland, yes. They're doing a lot of work. It's a lot of like really massive companies that are putting money into this.
Hey, Elizabeth, step back for a second, because I will say when we were on our planning call and we were, as I said, our producer, Paul Brennan, bringing this to our attention, we were talking about it. I mean, what are the kind of stories or the main themes that are kind of circling your world when it comes to feeding the world? Because I was saying, it was interesting to hear about the cost of eggs and people talking about the shelves being empty when it comes to buying eggs over the last couple of days or last week or so. I go back to the pandemic. I understand it was extreme, times, but most of us had never seen empty shelves when we walked into stores for various goods. But I do feel like there's some momentum. Go to the developing world, and they've had food problems and food issues and not having enough for years. So what are some of the big themes that are going on right now?
Well, I mean, you mentioned eggs. Everyone's asking me about eggs. That's like one of the biggest things that we're talking about right now. You've got bird flu, right? Which I think that we've all realized is happening now, right? Worst outbreak of bird flu ever on record, which just decimates egg supply. You have to kill every bird who's like anywhere near a bird that has bird flu. And so it just like you can have entire flocks that are just destroyed all at once, right? But then you've also got these cage-free mandates, which if you're unfamiliar with, this just means that in certain states, they're saying now you have to sell eggs that are raised in a way that we think is more humane, so they can't be raised in cages, right? So there are entire states where you can only get eggs that were raised cage-free. And so that's actually what we're seeing right now with a lot of these shortages, is that you had bird flu, and then you have these cage-free mandates. And although bird flu is kind of lessening in a lot of areas, cage-free just got hit. And so in states like California, like Colorado, where you can't sell eggs that were raised in cages, you have to just wait for these cage-free producers to restock their supplies, which is really, really tough. And so you see all of these food shortages. So it's just all these kind of weird things that all happen at once in a way that no one could have predicted, right?
Right. So, Elizabeth, just in the last 30 seconds that we have with you, as somebody who covers the space so closely, do we get to a place in the near future where we'll be able to use microbes to solve these fertilizer problems?
So there are products that we think work in some circumstances. The problem is finding a product that works in every circumstance, in every farm that you apply it to. I think that we're still a ways away from seeing a product that will do that and will get like mass, acceptance.
Pretty interesting stuff, and really important to our world at large, no doubt. Elizabeth, thank you so much. Really appreciate it. Elizabeth Elkin, she is Bloomberg News ag reporter, follows the space for us, and you can find her at Twitter at Elizabeth Elkin, Elkin, joining us via Zoom in New York City. I think about food a lot.
You have to. I think about food a lot, not just for the reason you think about it a lot from the perspective of like we need to feed the world. Which, by the way, we have kind of a theme in this last hour where we're talking about food and feeding the world. Tillamook CEO coming up later.
Ice cream, cheese.
Yeah, that's how I think about food. It's just like, what am I going to eat next? Like, where am I going to get my next ice cream?
Can I tell you, Tim thinks about food. Travel with him, and it's like, can we get some food? Can we get some food?
It's actually true.
It's so true. He's in great shape. Go figure. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg, wrapping up a losing week, a holiday-shortened week, but down 0.7% on the S&P. The Dow this week down 2.7%, but NASDAQ third weekly gain in a row, up on the week by 0.5%. Today, winning day for the Dow, the S&P and NASDAQ ending the session solidly in the green, with the S&P up 73 at 39.72, a gain of 1.9%. Stocks clawed back some of this week's losses as a tech rally boosted risk sentiment, and comments by Fed officials dialed back fears of overly aggressive policy moves. The Dow today up 330, up 1%. NASDAQ up 288, up by 2.7%. 10-year yield 3.48%, 2-year yield 4.17%. Spot gold 19.27 the ounce, down 0.3%. West Texas Intermediate crude up 1.2%, 81.31 a barrel. A headline from the Bloomberg Professional Service: Morgan Stanley saw CEO James Gorman's 2022 total pay decline. His pay $31.5 million versus $35 million in 2021. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really appreciate it. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. They may be able to help your small to medium-sized business qualify for ERC assistance. What's the ERC? It's a tax credit for the sacrifices businesses made for keeping employees on payroll during the pandemic. Let Innovation Refunds help you grow your business. They don't get paid unless your business receives its refund. Learn more at getrefunds.com.
All right, it is still winter, although I got to say, birds were chirping this morning. It kind of felt like
felt
spring
a little
in New York
crisp.
City.
Yeah, it felt like it was spring.
Right, a little bit. But in the city that never sleeps, there is still so much to do, Tim.
Yeah, the question is, well, what are we going to do this weekend?
All right, well, New York, NYC and Company, it is the official place to go for those looking to promote what's going on around the city, and really a great place for all of us to check out if we are looking for something to do. So let's get to our guests.
Yeah, we got Tiffany Townsend with us. She's Executive Vice President for Global Communications at NYC & Co. with us on Zoom right here in New York City. Okay, so before we get to, what's going on this weekend, I want to take a step back and just think about what you guys do over at NYC & Co. because your job is essentially to market New York City to the rest of the world. And it's a job that has changed a lot over the last couple of years with the pandemic and with international travel leaving and then coming back. Where are things right now?
Well, we are certainly in rebound mode, and I think it's always a good bet to bet on New York City. It always tends to rebound. I've had the good fortune of working with NYC & Company for a number of years now, and have seen things, such as recovering from September 11th, recovering from the financial crash. And I think what we've always seen is that New York always does rebound. And so where we are right now is that we saw roughly 57 million visitors, nearly 57 million visitors come to New York City at the end of 2022. And so that represents about 85% of what we were in 2019, which was a record year just before the pandemic. And that's also a roughly 71% increase in travel to New York City over 2021. So we are continuing to make significant gains. Travel is coming back, certainly, to New York.
So almost back to normal, which is a really good thing. I mean, are people who are coming back doing kind of the same stuff that they were doing pre-pandemic?
I think, yeah, they are. There are certainly a lot of sort of hallmarks to visiting New York City, whether, it's your first time or your 10th. People want to go to places like Times Square. They want to do Broadway. They want to stay in certain areas of the city. We are always constantly pushing all of 5 boroughs. And I think just as people do come back and they do return, maybe they're actually looking for a mix of both. They are looking to explore maybe a little something new, but the hallmarks will always be there.
What is the best time to visit the city?
there's never a bad time to visit New York.
August is okay.
I love August. It's hot. It's hot.
But nobody's here. Nobody's here in
But
August.
I love August because of that.
New York is really a good place to visit all year round. I think every part of the year, every season of New York has something different to offer. Being able to be outside during the summer and hang out in the park gives you certainly one feel and one type of experience. But right now, what we're seeing in winter is there's so many wonderful experiences that you can do indoors, certainly some outdoors, and that's really what our winter programming is all about. And so you have Broadway, which is obviously great all year round, but then you also have our attractions. You have what we're offering for Must See Week. You have Restaurant Week. So you have all of those things. But, you know, as I said, there's really never a bad time to visit New York City.
Well, to that end, and we did speak with you a little over a month ago, Tiffany, you know, right around the holidays. And I remember a few days after we spoke, I was actually in Times Square for right before New Year's Eve.
Right.
Because we were going to a show. And I was so surprised. I haven't been there in years.
Wait, when was this?
This was like late December, like right before New Year's Eve.
Okay, this year.
This year, yeah.
Okay.
And I was walking to a show, walking through the area. So it was right before the ball drop, you know, a couple days.
Yeah.
And I heard so many different languages, people from all over the world coming to New York City. And I'm thinking to myself, why are you coming when it's like the shortest days of the year, the coldest time to be here? But I guess, you know, people want to be here year round. I live here year round.
The holidays in New York are pretty incredible.
Right? I live here year round.
Yeah.
It's, you know, as I said, it's never a bad time. And there's just so many things to do. There's so many options that I think, it never really dissuades anybody. And I think that also you have to remember New York City is a very aspirational destination. It is a bucket list destination for so many people. And so it doesn't really matter to them whether it's raining, whether it's snowing, or whether it's what you might perceive as inclement weather. It's something that people, it's a place that people want to come to, and there's things that they want to do here. And so a lot of it is, coming, seeing the holiday lights, doing Times Square for New Year's Eve. And so that's really something that's really exciting for a lot of people, exciting even for us who live here.
Tiffany, I have to say, my daughter and I have a tradition that we come in Christmas Eve, and it was so cold this Christmas Eve, but we do it. We want to see the tree. We want to just, be in New York because this city does it like no other. Having said that, one of the things that's really cool that we do, a couple of different things, is New York City NYC Restaurant Week. Talk to us about that and the kind of momentum, because this has been going on for a while now.
It has indeed. We're now in our 31st year for NYC Restaurant Week, which is pretty incredible. And so started back in the 90s, and here we are 31 years later, and we have over 500 restaurants across all 5 boroughs that are participating, which I think it's just so impressive. And we've probably got somewhere near 60 cuisines. So I really feel that there's something for everybody. And we've got set price points, $30, $45, $60, and that's across both lunch and dinner. So 2 courses for lunch, 3 courses for dinner. So really affordable. It just continues to be a really good deal.
I know I'm jumping all over the place, but this is how
it's all
I'm
good.
thinking today. So you did
She's a New Yorker. She can keep up with anything.
You did say that you're promoting all 5 boroughs. So I'm curious to where people, we know.
Do you really want to go like, really, are you?
No, I know.
Okay.
Well, I know where I am in Brooklyn. I see tourists all the time. Oh yeah, by Brooklyn Bridge
What
Park.
part of Brooklyn are you in?
Well, I'm in South Brooklyn, and then by Brooklyn Bridge Park is full of tourists. And it's increasingly seeming like people are, finally venturing past those parts of New York City that, people who live here don't actually visit unless they have family come and visit, and, they want to go to those touristy places. Where are you seeing people go in other boroughs right now?
I think they're really just getting further and deeper, really into Queens. People are going up to Mott Haven in the Bronx. They're getting deeper into Staten Island, exploring St. George and sort of mid-shore and South Shore. Certainly throughout Brooklyn, as far as what you're seeing, getting deeper into Queens, going to Flushing, really exploring everything that's there, whether they're doing something in the summer, like going to the Open or going to a baseball game, but everything that's around. There's got some really great dining options as well.
Yeah, like the best thing to do when you're going to the Open or like going to a Mets game or something, going and checking out the restaurants in Flushing. They're awesome.
Yes.
We love the Open. We love covering it. We do shows from there. What else? Like, is there anything specific about this time where there are just some great offerings, some great deals that are out there?
Well, I think we do this program in January and February because typically these are the slower months of tourism to New York City. And so this is really one way that we're looking to continue to attract inbound tourists and really also bring a boost. These programs are really important and supportive to so many businesses across the city, certainly to so many small businesses. And so this is our way of continuing to support the local economy and ensure that tourism continues to really be an economic driver for New York City, which it long has been.
When people come to visit you from out of town, where do you take them?
Good question.
Okay, so well, I live in Manhattan. I live on the east side, so I've got a lot of great stuff here. I can do the hallmarks. I can do Empire State Building. I've been exploring. Now we've got the Tin Building downtown. You've got Brookfield Place. I think I kind of do the, is it your first time? I might gear you to one thing. Are you a regular visitor? I might steer you toward, something else. I really also try to just be an accommodating host. So if there's something you really want to see, I'm going to try to make it happen for you.
All right, Tiffany, what are you doing this weekend?
What am I doing this weekend? I am taking my toddler around to whatever he wants to do. So we will hit the playground. That is for sure. If it's warm enough, we'll absolutely hit the playground.
Tim, you can relate.
And actually go out to eat. You might find me at Bemelman's this weekend.
Ah, nice to know.
We're not taking our toddler anywhere to eat.
Why not? You gotta start him young because then they get used to the restaurants.
Well, I think it's too late.
Absolutely.
He's not used to it.
Aggie was going toddler. Man.
It's not pretty. Just tearing up dollar bills if we do that.
Tiffany, really good to check in with you. It's a nice beginning to our weekend. Take care. Tiffany Townsend, Executive Vice President for Global Communications at NYC & Company, joining us via Zoom in New York City.
What are you doing this weekend? Resting?
I'm working on taxes.
Still? I thought that was what you did for the long weekend.
It's complicated.
Okay, I'm sorry. Say no more. I don't want you to be implicated in anything.
No, it's all on the up and up. It just, it's a process. It's a process. We'll find something fun to do.
Okay, good. Pizza night?
It's so sorry. You're going to make me laugh. Pizza night. Yeah, I'm actually, the place.
Cheese on the pizza?
Cheese on the pizza.
Okay. Some Tillamook cheese?
Nice. Yeah. Nice segue. Because you know what's coming up?
We're talking to the CEO of Tillamook.
Can I tell you, Tim has been talking about this nonstop this week.
I love that ice cream.
Where are we going?
Let's go to World and National News. Nancy Lyons is in our D.C. newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden has been spending his afternoon hosting bipartisan mayors at the White House. He cited a milestone while addressing the leaders.
Today is 2 years since I was sworn in as president. And, with your help, we've gotten a lot done.
Biden says one item, though, that has not been done yet is the raising of the debt ceiling. He says a default would be an unprecedented calamity, and he will have a talk with House Speaker Kevin McCarthy. Well, the U.S. will impose more sanctions against the Russian private military company, the Wagner Group. White House National Security spokesman John Kirby calls it a criminal organization that has carried out atrocities.
Wagner currently has approximately 50,000 personnel deployed to Ukraine, including 10,000 contractors and 40,000 convicts. Our information indicates the Russian Defense Ministry has reservations about Wagner's recruitment methods. Despite this, we assess that it is likely that Wagner will continue to recruit right out of Russian prisons.
Kirby says the Treasury Department is also designating Wagner as a transnational criminal organization, putting it in the same league as the Italian mafia and Japanese and Russian organized crime. The March for Life is celebrating 50 years of gathering to overturn Roe v. Wade. This year, the group's president says they're finally celebrating their victory.
Your public, peaceful witness to the inherent dignity of the unborn child every year here at the March for Life led the way to that momentous decision. So thank you.
Jean Mancini says they still need to convince Congress to pass a nationwide ban on abortion. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ all advancing today. S&P 500 index up 74 points today, a gain of 1.9%. Stocks did claw back some of this week's losses as a tech rally lifted risk sentiment, and comments by Fed officials dialed back fears of overly aggressive policy moves. Now, for the week, the S&P was down 0.7%. The Dow this week down 2.7%. But in this holiday-shortened trading week, we saw NASDAQ gain 0.55%. Winning day today with the S&P closing close to session highs, up 73, up 1.9%. The Dow up 330, up 1% today. NASDAQ up 288, up 2.7%. West Texas Intermediate crude oil today rallied 1.2%, 81.31 a barrel. Cole Smead is president and portfolio manager at Smead Capital Management. And right here on Bloomberg Business Week, he explained why he is all in on energy.
Wall Street tends to be a copycat game, right? Something starts working, people copy it. It's just kind of the nature of the beast. Dogs chase cars, people chase stocks. And what we find really interesting, and all our meetings, I've been doing meetings for the last 3 days here, people are asking that same question. In other words, why do you own so much energy? But what's weird is they're not running after it.
Gold down 0.3%, 19.26 the ounce. 10-year yield 3.47%, and the 2-year 4.17%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. That update brought to you by Innovation Refunds. It's your daily reminder from Innovation Refunds. Even if your small business only had minor setbacks during the pandemic, you could still qualify for a payroll tax refund. Provide the tax experts at Innovation Refunds with some basic information and let them calculate the amount you're eligible for. Learn more at getrefunds.com.
Or I have a piece of advice. Don't go to the Tillamook website when you're really hungry and you still have a broadcast to do and you still have about 18 minutes to go, because it just makes you even hungrier.
Well, that's what we're going to do.
Okay.
So bad news.
I'm sticking with the website. If you've spent any time in the dairy aisle of the supermarket, you have definitely seen cheese, yogurt, butter, and more from Tillamook. It's a dairy co-op started back in the early 1900s. Today is a $1 billion brand that sells products everywhere from Albertsons to Target to Walmart and so much more.
We got the CEO with us, Patrick Kreitzer, the CEO of Tillamook, and he joins us now via Zoom from Oregon. Okay, Patrick, we're going to talk about a lot. We're going to talk about the business. We're going to talk about inflation. We're going to talk about what you see in the economy. But first, what the heck do you put in the ice cream? Because everyone I talk to, including, myself, because I love the Tillamook ice cream.
My husband, huge fan.
Jason Kelly, our colleague, when he found out I was interviewing you, he said, you have to try the ice cream. And I'm like, I know, we've already talked about the ice cream. What's up with the ice cream?
Well, there's lots of cream in it. We put a lot of dairy in every one of those ice cream cartons. A lot of love goes into making that, and I'm glad you appreciate it.
So the secret is the dairy. Like, it's an extra serving of dairy or something, right?
It is, yeah. Lots of extra cream, and when you make ice cream, you determine how much cream to put in there, and also how much to fluff it up. And we do a little less fluffing and a little more cream, and it tastes fantastic.
What's weird, though, is, and this is a business question, it's not like it's much more expensive than sort of competitors right there in terms of how you think about how it's presented, because it comes as like a big, you get a lot for your money. It's like still a good value. How do you calculate that move? Because the dairy part is the expensive part.
It is, you're right, the expensive part. And I'm glad you recognize that. We position the brand, as it has been for over a century, as everyday premium, which means, you're going to pay a little bit more for it, but there's a lot of value packed into that ice cream carton or into that package of cheese. And so we're trying to make it accessible enough that you're going to pick it up every week, enjoy it every week in your home. But you'll appreciate the quality that you paid a little bit more for.
Hey, Patrick, you are in and out of, I'm sure, all of the stores that stock your items. There's a lot of competition out there. So how do you make sure that you do stand out? And I'd love for you to get into the relationship with your suppliers, meaning the farmers and the individuals that you work with directly.
Yeah, absolutely. And those two things are very connected for us because it all starts with that relationship with the farmers. We are a 114-year-old farmer-owned cooperative. And in fact, cheese, which is our primary product, is made the same way it was 114 years ago. And our farmers, demand that we keep the recipes the same. And as we were just talking about, put a bit extra value in every product. And that's important to them. And that's helped us stand out on the shelf as we've expanded across the country. Up until 2014, we were a much beloved Pacific Northwest brand. And then beginning in 2014, we began expanding around the West. And now we've been very pleased with the acceptance we've received around the country as we've expanded into, as you said, the top
Hello,
of the show
traders
here.
again. I'm going to move even higher. Stop loss to 22,000 to 1.4. 22,000 to 1.4. It will give me 7% in profit. What it means, 7,000 pounds. Okay. Please place your stop loss for Bitcoin. Okay, guys. I'll speak to you later. We still have 12 minutes until, at least in London, market will close for Forex and Bitcoin. Bitcoin, as far as you know, guys, if you trade, it starts working on Sunday, but I don't trade on Sunday, so I want to get maximum profit from today on Bitcoin. Okay, guys, I'll speak to you later. Stay safe.
When you're in the store and you don't think there's enough Tillamook product, go talk to the store manager, and that'll help a little bit.
Hey, do you guys only produce products at the headquarters in Tillamook, Oregon?
No, we've actually expanded a bit since our early days of all the production being in Tillamook. All of the dairy farmers that own the cooperative do live and farm in Tillamook County. Many people that know our brand don't know that Tillamook's a town and a place. Actually, the high school mascot is the cheesemaker, so we're very much integrated into that community and owned by that community. But as we've expanded around the country, we've partnered with other cooperatives and other manufacturing partners to make product to our very precise and high expectations and specifications in other places in the country, so we can make sure we're getting product into those stores where people are looking.
So is there any discernible difference between something made in one facility with dairy from one area versus another area?
There isn't. We do make all of our cheddar cheese, which is our core product. We do make all of that in Oregon. And then we move it around the country. We cut and wrap it in a few different places, but it's fundamentally made all in Oregon and with our recipe. But where we do make other products, for example, cream cheese or ice cream with partners, where in those factories are very tight, close partnerships. In some cases, our partners will put in equipment specific to the way we make product because of, we're not varying the way we make it, so that you can't tell any difference. If you come visit us at our visitor center in Tillamook, Oregon, which a lot of people do, we've had 1.3 million people visit us in a single year there in our factory on the coast. If you come visit us there, the product's gonna be exactly the same as you find in Wegmans.
Patrick, what's the bulk of your business? Is it the ice cream or is it the cheese, as you say, your main product? And where is the most growth?
Most of our business is cheese. Ice cream has been our fastest growing product. It's turned out to be, as we've expanded into new regions in the U.S., it's turned out to be sort of the easiest entry point for consumers to kind of find us. That, hopefully that big wall of a full door of ice cream flavors with our bright colored packaging kind of draws people into the brand. And then once they find us there, they like to move and they discover our cheese and our cream cheese and our other products.
Consumer product companies always looking for a good brand. You seem like you would be ripe for the taking. Staying a cooperative, staying private, still the plan, and just got about 20, 25 seconds.
Yeah, that is the plan. Certainly we get those calls, but our farmers are very proud to own this brand and this company and what it's meant to our local community.
Well, do come back soon. This is a great story and certainly something that is very relevant to our worlds. I'm sure Tim will have some ice cream, Tillamook ice cream tonight, and I'm sure I will as I get the chocolate chip mint. That's my husband's.
That's what I like too.
Patrick, thank you so much. Patrick Kreitzer, he's CEO of Tillamook, joining us via Zoom from Oregon. Really fun conversation. This is Bloomberg.
It is 4:53 on Wall Street. Charlie Pellet with today's company headlines. Morgan Stanley decreased CEO James Gorman's compensation by 10% to $31.5 million for 2022, a year in which profit tumbled and the shares sank. Morgan Stanley shares, though, today up by 2.2%. Goldman Sachs declined today after the Wall Street Journal, citing sources, reported the Federal Reserve is investigating Goldman's consumer business. Marcus, the Journal says the Fed is investigating whether the bank had the correct safeguards in place as it ramped up lending. Goldman today down by 2.5%. Google parent Alphabet is cutting about 12,000 jobs, more than 6% of its global workforce, becoming the latest latest tech giant to retrench after years of abundant growth and hiring. CEO Sundar Pichai told employees in an email the cuts will affect jobs globally and across the entire company. With the layoffs, Google joins a host of other tech giants that have drastically scaled back operations amid a faltering global economy and soaring inflation. Meta Platforms, Twitter, and Amazon have all slashed their ranks. Today, we had Alphabet rally by 5.7%. Also cutting jobs, the online furniture retailer Wayfair, it's slashing about 1,750 positions, roughly 10% of its workforce, becoming the latest company to seek to bring costs in line with a new economic reality. Wayfair shares surged today by 20.2%. Those are some of the company stories we're following. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week on this Friday, January 20th. Let's get a check on the latest world and national news with Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Ukraine is appealing to its allies for more advanced weapons, including heavy battle tanks, which Britain is contributing, but Germany not yet. Bloomberg's Irv Chapman has more from Washington.
The United States is sending Bradley armored vehicles, but not yet Abrams tanks, after holding back and then contributing other advanced weapon systems, Yuri Sak, advisor to the Ukrainian Defense Ministry, said in a Bloomberg interview.
Every day of procrastination results in deaths and destruction. But if the Allies don't give us those tanks, there could be a day when they will have to use them themselves, because Russia has no intention to stop in Ukraine.
Ukraine might wish to retake Crimea, Sak said, but for now wants weapons capable of knocking out Russian encampments and supply lines there. In Washington, Irv Chapman, Bloomberg Radio.
Treasury Secretary Janet Yellen says the U.S. is all in on Africa. During a trip to Senegal, she announced the U.S. is joining with Africa to address food insecurity.
This partnership will address the short-term needs of upwards of 300 million Africans affected by...
Okay, guys, as you can see, a couple of minutes left until market will close. I will place stop, actually guaranteed stop, and if price will reach the 22,216.7% from the entry point, I will close position. My advice to you guys, if you don't have this kind of facilities, if your broker not allows you, if you don't have kind of agreement with them, just sell at the offer price. Okay? Whatever bid price or offer price, whatever broker offer you to sell for, to buy from you this contract, you can sell it. Okay, guys? Have a great weekend. And I'll speak to you on Monday. We will see what's going to happen on Monday with Bitcoin. Stay safe and have a great weekend. Bye-bye.
testifying under oath right now in a multi-billion-dollar trial over claims he